Woke up late, charts on fire, red and green like a funeral pyre. Discord screaming LFG, but my portfolio's haunting me. Spiked my coffee with regret. Last night I longed to break out bet. Now I'm broke, not broken yet. Just one more pump, I won't forget. Buy high, die huddling. The gen brain dopamine's controlling. Ride the whale, get wrecked clean. This crypto dream's a guillotine. Fake guru with 1,000 subs showed me coins in shady clubs. Promised moons, Lambos and jets. Now I'm left with JPEGs and debts. Scalped my soul in a 5-minute chart. Market dumped and it ripped my heart. But I'll reload, I'll play to win. Even if I lose it all again. Buy high, die huddling. Gas fees burn, but I keep rolling. Almost gone, greed's the king. This crypto dream's a punk rock thing. Diamond hands with the crack in the glass. Risk it all, no brakes, full gas. Liquidation, call me sweet. Whisper welcome to defeat. No stop loss, no regrets. Code and chaos, no safety nets. Satoshi's ghost in my DMs told me to ape again and again. Buy high, die huddling. Gas fees burn, but I keep rolling. If I crash, at least I tried. In this wild west of blockchain rights. I'll be trading till the lights go out. Charts are noise, but I live for the sound. One candle spike, and I'm back in town. Crypto's a fight, and I'm 10 toes down. Diamond hands with the crack.
Good morning, guys. How's it going? Tom Struct. How you doing, man? From Tasmania. Dennis. Greetings. Alien Girl, what's up? Randy, how you doing, man? Bluff. Hope you're doing better. I'm doing great, man. I was just like insanely tired yesterday. I didn't get any proper sleep. I was just watching the market. It seemed to be pretty boring without me, other than like this extremely transparent move here where we had this pullback. We retested the neckline here of this ascending double bottom structure, and then we just came to our point of interest and got rejected. It was pretty easy to follow that one. But now we're kind of building this descending channel, like this regression trend on the way down, preparing for a potential break of this downtrending momentum. So I'm pretty excited for that. If we instead come down, then we got a couple levels we can watch out for. Hope you're alive. So, Beyond Seek from Peru. I didn't know you're from Peru. That's cool. Nonstop. What's up? Chad, how you doing? Good morning, Sterling. Hope you're having a great day. I got, we should be good until 9:30, but I've got some people coming, who are here right now, getting ready to grind a ginormous stump that I have in my backyard. So the sound should be fine, but it could get loud near the end. Tradefly, what's up, man? How you doing? Thanks for showing up. But yeah, let's go over it. So Bitcoin has been getting its butt kicked ever since we got to 117,000. We hit this 16-day previous value area low from this consolidative period here. We hit there's lots of reasons for this rejection. We mitigated some ore blocks, previous value area low, supply barrier here. So we had lots of confluence. So once we got that opposing change of character, the initial target was roughly around the 50-day EMA, but when we had that big correction, it extended our target to here, and then we just never got an opposing change of character telling us that we're going to go back up. And now we got that opposing change of character down here is a good spot. Like we bounced off of the confirmation consolidative formation here, this valley area as support, and it's kind of like our last little barrier between like the current price action and this previous valley area high, where there's some decent liquidity right below this this low right here. Right, so there's lots of reasons for us to bounce if we go down further. And I'm watching like the starting point is around like 107, 850. So within that like little range right here, we could prepare for a potential reversal if we failed to get that break of momentum and strong break here. Like let's see, our key level right now is right here at 111.548. Now if we break that, maybe through like an inverse head and shoulders of this descending channel, we could start anticipating for us to come back up to at least the 50-day EMA is where I'll be targeting to see if we have a bearish reaction against it. We have some concerns along the way, like we have this hourly order block, liquidity above these highs that could be used as a form of exit liquidity that could induce a reversal and cause us to range here. But if we get that negative reaction, then yeah, we'll listen to the market and take some profits. But overall, I'll be targeting the 50-day EMA in hopes that we break past it to continue our way back up to 117K again, which would be like the measurable target for this descending broadening wedge here that we've been forming during this drop. So this will be our lookout, TP1 area, and TP2, if we do get that reaction that we were looking for. If we don't get that reaction, we still have cool opportunities down below us. So I'll mark a key level for us. Right now, it's this right here. We want to have like a full body candle close above this level. Now that could rotate and change. We could go lower, and this could be our next key level. We could go lower again with another pullback. This could be our next key level, right? Now down here, we have some opportunities for longs as well. We've got if you want to try to front run that move, right? Getting in on these breaks sometimes it can be a little nerve-wracking. So sometimes you have to wait for that pullback, break a structure, and jump in on the break of structure so you can use that as your stop loss guard. Or after the initial change of character, it's also really common for us to have some drawdown between the break and the strong low. And your goal is usually to try to get in during like maybe like a VWAP retest in this scenario, or a potential like 618 on the Fibonacci. But yeah, if we come down to this level, I have an alarm set for here because we were consolidating here before and we kind of had that rounded top fives at the time. So I was looking for a potential SFP after a break of this low, maybe a sweep of this wick, and then use that for a good entry point. We could do the same thing right here with this local price action. We could come down, sweep there, come up, break this level. If we fail both those scenarios, we have this level right here that we can watch. So lots of little areas and lots of points of interest right now that can give us great opportunities for potential long setup. I'm not looking for shorts today, so just looking for the longs now. This is the last little short opportunity that felt safe to me. So we delete that. There we go. So it's just a matter of waiting for the picture to be painted to see which direction, what kind of trade opportunity we can take. So you guys should expect a signal from me pretty darn soon in the community server. But yeah, Kyle just wanted to ask about the new HRG strategy and how it works. So that's more of a question for him. We've got 2 more calls with him. We have one today at 4 p.m. and he's going to go over a little bit more thoroughly. We went over on Monday together. Now, that's not something that I personally have drilled into my head just yet. But using it in combination to market structure can give you a really good edge for like long-term swing trades. He tends to use it, finds it reliable on like the larger time frames, like the daily, for example. But yeah, once I have my head wrapped around it, I'll definitely teach you guys about it too. It shouldn't be too hard. It's basically using, there's a built-in tool actually, the Elliott wave. You're going through your 1, 2, 5 waves, and then you have your ABC correction. So you'd find this under your Elliott waves little section inside of your trading view. And like his goal is, after you see an ABC correction, is to get in on the first wave and prepare for like your macro swing trade exit on the 5th wave, unless you see like bearish reaction. Same way we look for barriers in our trades, you look for barriers within it that could invalidate its ability to get to that like 5th wave, for example. So like jumping into a supply zone prior to the 5th wave, for example, and having an opposing change of character could invalidate a continuation on that strategy, for example. But yeah, I don't know enough about it to be able to tell you how to use it basically right now. He did recommend a really cool book. I have it pinned for you guys in Trade Talk. So if you go to Trade Talk, oh, I don't have it pinned there. I have it pinned somewhere. Yeah, I'll find it and I'll get it up here for you so you guys can download it. What I'll do actually is I'll add it to our book command. So when you go to the server and you type something like exclamation point books, you'll get a message from our bot, which will give you a list of books that I usually recommend. And I'll add it to that recommendation list. So you guys can just click on it here and download it. Cool. All right, eternally right now, building a bit of a bear flag posture. We got, it's not a proper change of character on the 5, but we lost the VWAP. We lost momentum. If we lose this level, then we'll have a proper change of character that would give us a move to here. Let's see what happens. Or we can have a slow climb until we hit this point of interest, and we'll see what happens. If we either get this break, or if we'll have our head hit and get an internal change of character to bring us back down. Okay. Did he say what time frames and how many trades we're potentially looking at per day or week? Well, because he's using a large time frame like the daily, you could find a bunch of setups within a day, but when you go to take them, you might have to sit on your hands and wait a little bit, because he's using like limit orders in areas of strong demand or supply in combination to his Elliott wave theory, not Elliott wave theory, his Neo wave theory. So it's a lot of sitting on your hands and waiting and being patient and using limit orders to jump in. So I would assume that he might get about, I would say 10 trades per month. That's just assumption though, probably 10 trades per month. But you could find like dozens of setups between assets. It's just, yeah, you have to sit on your hands, wait a long time. If he's using like the daily time frame, for example. And you can get a rough idea of that by looking at the signals, because he gives the signals inside the community here, right? And if you go down to his channel, you can literally look at the timestamps, right, of all times he gives a signal and how long it takes for them to execute. And then you divide that within the month. And then if you want to find out what that means throughout the week, then you just divide that number by 4. And then you have an idea of how much you would get for a week. But yeah. Should I close my short from 112K, Alien Girl? Well, first of all, good job getting in there. I know I helped some people with an exit plan because some of them got in around here. I wouldn't. There's no reason to close it yet. I would suggest to have your stop loss here at 111,700. Secure your capital, but yeah, we don't have a reason just yet to get out. We could see like a break of structure which will threaten your stop loss by moving it around here, but yeah, I could see us coming back down a little further before potentially getting that bounce coming up. Your exit plan should have been based on like a test of these previous highs right here, and seeing like this break right here. We have this internal 5-minute change of character. Where's the 15? We don't have an opposing change of character on the 15-minute yet, so which is why I'm suggesting here as your strong high guard. But yeah, this would have been the best exit plan here. I know that we got the benefit of hindsight, of course, but when you're looking at like these previous levels of resistance like this, it's easy for them to act as support. So if we do get that second opportunity, then I would suggest closing around here, at least some of your trade. And if we get that lower low, then you can rotate your stop loss from here to here. All right, so that is Bitcoin. It's just a matter of waiting. Not saying we need $1 million to trade, but one like 10 to 50K would boost our morale pretty well. Yeah. Well, yeah, to put in enough margin to do $1 million, to make $1 million off a trade, sometimes you gotta have a really good exchange versus something like that for liquidity. Cal, can you explain things? You explain things really well. I appreciate it. Oh, no problem. Appreciate it. Hey, Cal and crew, Free Breaker, how you doing, man? All right, so let's go over Ethereum. Ethereum has had relative strength over Bitcoin. Its positioning is little unique, of course, too. So we broke this downtrending momentum right here. It's been holding it down since 4,831. The measurable target for this descending broadening wedge is right here. We are currently coming into the supply zone here. We are getting a bit of a head and shoulders kind of vibe with ascending support. So we can draw the support level. So this is the momentum here. We can delete this. This was a hope for an SFP here, but we got that invalidated pretty quick. Let's see. So here it would be a good key level to see broken if we want Ethereum to go down. If broken, the measurable target is basically, these are awkward when they're ascending like this. Break of our key level down to here. So pretty much where the liquidity starts to go cold. So if you look at this posture, and you have the head and shoulders structure as well, warning you of sell pressure, failure to create higher highs. It hasn't been confirmed yet, right? We have to break this level first. If we break this level, we confirm that head and shoulders. And we start taking that liquidity during that moment, right? And if we look at the posture here, we've been taking liquidity, but we haven't really started adding from the upside until here. But we've been adding more and more to the downside. So the probability of it breaking to the downside is higher than it is breaking to the upside right now. Doesn't mean it can't go up, but the probability states that, like, especially if this level breaks, we're likely to come down to at least here. And this is our measurable base target, suggesting we can come down to here. Now, Bitcoin has already tested this level right here relative to where Ethereum is, right? This was the same level here that we retested here, but Ethereum has yet to test that ever since the breakout. So this should tell us that the dominance should be mostly on Ethereum's side right now. So we can find that out right through the dominance chart. You can see it's starting to go down on Bitcoin dominance. Now I have a new dominance chart layout for us. Let's go back to Bitcoin. I got like a new pre-TA chart that we can pull up every time we do our lives. And I was expecting a bounce, off this zone here. So we zoom in. A little bit. So we had like this inverse head and shoulders posture, suggesting for us to come back up to 59%. We made it to about 58.9%. And then we ended up getting an opposing change of character, and we start coming back down, which is reflecting really well on the Ethereum chart. Let me just pull this up. So some alts in Ethereum might have some relative strength, meaning when Bitcoin drops, they might not drop as hard, right? When Bitcoin pumps, they might pump harder during that kind of scenario. So that's what kind of behavior you can expect when Bitcoin dominance is on its way down. We're starting to get that like double top fives in the 15-minute time frame. So it's telling us that money right now is flowing mostly into altcoins. Either altcoins or USD dominance. And looks like it's mostly into alts. So other dominance is going up, whereas USD dominance is only slightly going up. Alrighty. What assets do you guys want to look at? I got about 30 minutes. Three bros. I'm doing a 9-to-5 job during job. I also see market take trade. Which time frame should I trade? Okay, so if you're working a 9-to-5, which time frame should you focus on? I would recommend, if you are like trying to make a good side money, but you're also pretty busy, to focus a lot on the hourly and the 4-hour time frame and the daily. Like, do your top-down analysis. Start from the daily, work your way to the 4-hour, but do, I would say, most of your execution on the 15-minute and the hourly if you're working a 9-to-5. You should get about, depending on the strategy, of course, but 4 or 5 trades per week. And depending on what kind of job you have, what kind of freedom you have, because I know some jobs you're not allowed to have your phone on the workplace. You're not allowed to do a lot. So if you have a certain amount of freedom to like go look at your computer or to check on your phone, you can set alarms at key levels, right? The way we have our alarm set here, so you're only like looking at the chart when it's appropriate if you're stuck at work during the time. Or you can just make a simple rule for yourself saying you will not trade unless it's between a certain time frame or a certain day of the week that you might have off. I know when I was working a 9-to-5, I was trying to figure this out after I came back home from like a 13-hour shift. So like I would take the time to like master learning as much as you can first. So you know how to set the appropriate alarms to, and what key identifiers you need to look for before entering a trade. Oh, you're always on screen. Okay, so you're set, man. You have a good scenario where you can, set your alarms and then you're good. I'd recommend learning my strategy. It's like a range-bound trading strategy that you can use on the 15-minute time frame. You get about 4 or 5 trade opportunities per week when we're ranging. But when we're in a trending environment like this, you're usually stuck sitting on your hands if you're not already in an existing position. Can you explain Tonky Honks? I'm making a video with that comment. Could you explain how to and when you'd start the Bitcoin macro short? Yes, I can do that. So Bitcoin macro short. Rule number 1, you go to chain exposed and you look at supply and profit and loss. This is a free tool to use. Now this thing renders very slowly. The last time it was rendered, was when the Bitcoin price was at 112 point, about a couple days ago. So it's slow to render these rules, but the good thing about these rules is that these aren't the immediate rules you need to worry about, right? These are these are the warning telling you to prepare for the final rule, basically. So rule number 1, supply and profit loss above 90%, right? So that rule has been met quite often recently. So it's definitely not the key rule that you want to use to say, I want to sell and prepare for a short. So as long as supply and profit loss above 90%, that's rule number 1. Rule number 2, relative unrealized profits and losses chart needs to be overheated in the 2.35 zone or higher, right? This is the one that, it's just like the second rule prior to the final rule. This will help you know when the market's really overheated. This tells you literally how much profits people are in. And if the masses are overall in a large amount of gains, we expect a crash very shortly afterwards. So the last rule after we get up here, and it's going to require you to learn market structure. You basically look at the daily time frame, and you look for a daily opposing change of character. So we basically just had something like that happen for a good example. See how we had this big double top. We had this change of character right here. So this is what you're basically looking for. So that, let's go zoom out. The last time it occurred where all the rules were met, we're right here. Right, so if we zoom in on relative, the REPL chart here, see how we got in the overheated zone? This was around we started getting in there around January to February of 2021. If we go to this chart here, this is like February 2021. We look for the daily opposing change of character, which didn't happen until here. This is when it would tell you when all the rules were met to prepare for the top to be in. Now, I did not follow these rules properly the first time I started taking them for the short, to tell me to sell. So I held through this when I should have sold. I was very fortunate to have a second opportunity. So we had that daily change of character up here again at pretty much the same levels, right? And then we came down, and I got out around here when we had that retest, right? And so I got it around here, around the retest, and then I sold my Ethereum shortly afterwards within this consolidative range when we had that miniature altcoin season at that time. So this tool is also a great tool to tell you when the altcoin season is going to happen. You can have crazy, cool, wild rallies, but this usually dictates when the season is in, when the funds from Bitcoin start to flow into network tokens and then into the degen stuff built on those networks. So that's another example here. So basically that's what we look for, man. Just look for, this will make you an amazing investor. If you don't think trading's for you, these rules alone will help you know when to invest. Because you look for the exact same thing, but in reverse on the RPL chart, when the supply is at a loss of over 50%, and when you see the REPL chart being in the opportunity zone down here in the green, and then you look for the daily opposing change of character, like down here, and then you have yourself, all your rules are met. Now I front run the daily change of character. I got in at a internal double bottom, preparing for at least a move to here when all the rules were met, and luckily we blasted through it, and I was able to hold that trade for a long time. But yeah, all those rules helped me get in at 16.9K for the last cycle here, and it helped me determine that we're going to start a bull market around here. This chart doesn't show all the history, but there's a massive descending wedge here. But yeah, going back, I will be making a video about that for you guys so you can look through it when the time is right. Wagner, Kyle, I think we should check how much retail's money was in the last 3 bull runs tops that, yeah, overheated, since retail is much less in there. Yeah. So retail has been getting weeded out for sure, but doesn't mean retail won't come in, because usually retail is the reason why things get overheated, right? But they've been selling lately. If we look at the address bands, we can see people who are holding between like 1 and 10 Bitcoin, for example, been a big decline, right? These can come right back up. Like the adoption could come back up. And we could come up because of institutions now too, right? We could get overheated because of institutions. They want to fight for the supply just like everyone else. You could see it happening here, for example. People holding between 100 and 1,000 Bitcoin has skyrocketed ever since the start of the bull market in January 2023. So that's been absolutely soaring. But yeah, everything else has been on decline. So mostly the retail has been exiting. And we kind of consider retail people who hold assets for 155 days or less. I think the short-term holders. That's what Glassnode considers a short-term holder, someone who holds for 155 days or less. Those people are usually the ones that buy, and then they sell very shortly after they buy. And they're usually the ones that spark the frothing out the mouth crazy bull market rally, and then end up being used as exit liquidity. JL, but what, Kyle, do you think all these rules of capital rotation will happen when the players have changed? Most institutionals, less degens. So you make a good point there. Like the dominance charts are going to evolve and change for sure, but I don't think people have changed when it comes to the retail side. I still think that we're going to have, we can use others' dominance to help dictate when we're going to have these rallies. And we could also use it. We can't ignore the fact that the RPL chart can't be broken. Like the RPL chart cannot be broken. So when people are in a large amount of profits, it's going to include retail behavior and retail buys, right? So when we see that accumulation and the chart started getting overheated, we expect the same kind of behavior from retail, but institutions are probably going to be diamond hands hold, because they're using money for a different reason than retail is, right? They're using it for collateral. They're using it for inventory. Pluffin, Daniel, I have to ask. Oh yeah, Ask looked at CRO. We can look at CRO together, guys. See how that's doing. Do we have a CRO chart? No, we don't. Okay, so I'll just pull it up here. I know there was accumulation coming on with Zero from Trump media. Trump's right. Trump's accumulating it. And I can see that there's, looks like it came up because of that. Yeah, okay. 4 hours ago, Zero explodes 40% daily after Trump engagement. Okay. Pretty wild. So we broke through our supply barrier after we tested it, and the news allowed us to launch right through it. Let's mark this high here really quick since we're there. So this is the 4 hour time frame. If you mark this wick here, there we go. Just want to zoom out because we have this ascending momentum here. This thing just goes on a tear every time we have a recent test to this like not legacy support, but it's pretty key level of support that we've been having aggressive moves off of since October 2023. Every time we test, we have massive volatile moves that don't last very long. This is a 30-day pump, which is a decent duration, but the falling one's only been about 6 days. And now this time around, we're actually getting some consolidation, building this awkward regression trend along the way up. We broke past this valley area. We can delete this now. We should mark this previous valley area high. It could help us prepare for a potential support bounce if we return back down, which we likely will. These aren't really sustainable pumps. Here we go. And we'll see if we hold support above here so we can actually expect to go higher. We have a daily order block coming up at 28,942. We'll mark that on our chart. We should probably mark a little bit more than that. Just want to include that whole area of interest. It's not technically a proper pullback. Here's a rare situation that you guys could learn about. I'll send this to back. So when you have a pullback like this, and you see, this is what's known as a mother bar, where you can mark the top and the low. And if you have a pullback within it, internally we don't break this high, right? When we have that pullback, then it's not an actual proper pullback that you include in your market structural pulls, right? So this is what's called an inside bar pullback. And it's not technically a healthy pullback. So here we do have that daily order block though. We can include this whole area to prepare for potential resistance if we come back up there. We can delete these. These actually aren't going to be helpful for price action here. We can prepare for a potential daily SFP. We have 10 hours and 44 minutes left on the candle. So if we get daily SFP here, depending on how it closes, you can expect a potential return back down to the previous value high. And if we get acceptance into that value high, we could rotate right back down to retest this previous high and this previous value area low. But that's what I'll be preparing for if we got the daily SFP. Looking at the lower time frames, we have on the 15-minute a demand zone that starts here. We have this ascending momentum right here. What I would look for a front run of that daily SFP is probably like just a low time frame SFP from here. Okay, and that could be the front run to the potential break of this level. Especially if you get that higher high. Change of character. So we get the body close, you can prepare for a change of character and potential continuation, right? If we get the sweep, then you could front run this break, watch out for the VWAP, and then target basically right here. In these previous highs. Oh, Mark. There we go. All right, and the pathing tool, if I were to draw a path, if this breaks, maybe a bounce, retest here. And if we get the sweep, it could be a front run to the daily SFP. Let's see what happens. But those are two scenarios you can prepare for. But this condition for this break might only be met if we get that higher high first. So you can have that change of character confluence. But that's CRO, guys. Congrats if you're a holder of this. It must feel good if you're a holder and you see, you know, a 23%, 30% candle. See a pump like this in just a mere 15 minutes. It's insane. We delete that. It's not helpful anymore. But that's CRO. Let's go back to Bitcoin. How is it doing? Still consolidating around the VWAP. Real Talk Trading. Brian, what's up, man? How's it going? If you guys are looking for another YouTuber to follow, that's great, TA. Yeah, Brian's your guy. I'm wondering if CRO can see its all-time high again. Well, that's a good question. Let's pull up CRO again. We also have to have an understanding of its tokenomics to expect something like that. Now, it's getting a lot of an interest right now. But if we have inflation, we don't know the capabilities of that attention, what it could do for it. So we have to pull up CROs on CoinMarketCap really quick. CoinMarketCap, there we go. CRO, Chronos. Okay. So we're going to go over here on the left. I'm going to move my guy. There we go. I'm going to move myself over here. We're looking at the all-time high 4 years ago was 96 cents, 96.98. All right, so November 24th, 2021. All right, we're going to click on See Historical Data and look for November 24th, 2021. I'm going to hop back over here. We're going to run to 2021. There we go. So we're looking for November 24th. So we got this range right here. Now we're looking for the highest market cap. So November 24. So this is how the market cap closed on that day. It might not be the highest it ever occurred. This is how it closed on that day. So it won't include like the market cap peak if there was a wick, for example. It's based on the body close of that moment. So we have this number here. We're going to pull up our calculator now. Paste that there. Go back. And we're going to look at the total supply. We're going to copy this. And we're going to divide it into here. 2196. So this is telling us a big warning sign of inflation. Big time. So if we were to put the exact same amount of funds from CRO into it today, its price would be 2196. So we'll put that in there. So this is a warning sign of inflation, the inflationary damage that's occurred since its all-time high. So I believe CRO issues out rewards, and that's why it's inflationary within its tokenomics. So it's technically has hit the same amount of interest that it was at before from its all-time high. So it's basically reaching its all-time high in terms of market cap right now as we speak. Because there's more tokens now circulating. So just be aware that this thing does not need to hit its all-time high. It would need like a lot more interest. So like a 319% climb of its current market cap to get there, which is going to be about 3 times more than the interest it had the last time it was at its all-time high, which made it to like a 95 cents. So I'm just going to let you know right now, all these little resistance barriers are going to be significantly stronger, knowing that like it's, especially if they're traders that are trapped, are knowledgeable enough to know that like we're beyond its area, like its peak interest right now. So they might just exit, immediately get out, right? So these sellers are going to be a lot stronger, especially since they could have been holding for all this period of time, trapped up there for 1,227 days. So be aware of the next barrier concern. Like knowing what we know now, they just got amplified. So at 0.2739 will be our next big key area of interest, but we are basically at its all-time high in terms of peak interest right now. It doesn't mean it can't go up higher. I'm just letting you know, like, it's going to make it a lot harder. Like scenarios like this are the ones you got to watch out for, because it gives you an eye-opener into knowing like some assets will never reach their all-time highs again. Like Filecoin, for example, will never reach its all-time high again unless they change their tokenomics, which will require them to basically pull liquidity on an immutable contract and create a whole new version of the asset, similar to what happened to Gala, right? They want to change their tokenomics, so they had to completely rebuild a brand new token with the same branding, basically. Okay. Markets are waiting for NVIDIA earnings to come out today to move tech. Yeah, smart, Sam. Yeah. So I'll be looking, I'd recommend looking at the AI sector assets right now, like Render, stuff like that. Just go into the AI sector and just prepare for a potential reaction from those earnings reports. If you look at NVIDIA, one sec here. That's pulling up a ticker here. Oh, it's on crypto. It's always on crypto because I'm always trading crypto. There we go. We'll go to the NASDAQ. Earnings. Estimated. Is that a billion? 1.01 billion? We'll see. There's always a big surprise report, right? Always earning more than we expect. See what kind of reaction we get. Being at local resistance like this on NVIDIA's charts, coming into supply concern. We'll see what happens. The earnings report might allow us to break this and create new all-time highs. Let me a second here. Yeah, new all-time highs. It's a wild chart, honestly. Let's see what occurs. Kind of got that round of top fives right now. We've kind of flipped bearish in larger time frames when we broke here. Let's see what occurs. But yeah, I'll be watching alts in reaction to that. AI alts. Bitcoin sometimes has a bit of a reaction to it too. It affects the miners, right? When they have their chips and all that stuff. It's intense. I started mining recently, guys, so I'll let you guys know how that goes in case you guys are interested in mining crypto. I just ordered like 10 of them. So I'll keep you guys up to date on that. Maybe I'll make like one video a month or something showing the report. It's like a little mini report and how you can make money. Basically, you're just accumulating assets at like an FDV value. That's like the received value, get your holdings. And then your goal is to sell those returns that you get from the block rewards at tops of ranges or at macro highs, depending what your strategy is. For me, I always try to sell at tops of ranges for Dogecoin, but for Bitcoin, I try to do like a macro hold on it. So Dogecoin's like my tool that I'm going to be using to cover the expenses of mining and all that stuff and accumulate for like a side portfolio. Not something that I personally want to hold long term. Let's go back to Bitcoin's chart. Okay. Andrew, check out Solana versus Bitcoin on the weekly. Hello, change of character. Yeah, I think they saw a double bottom there. Sol versus BTC. Oh, I might not have time, actually. Running out of time here. Well, what's your thoughts on WLFI? Trump family launching it on September. I'm not really. With the way they've been running the cryptocurrency space for their own stuff, I would steer clear from it and just wait until the inevitable crash that will begin after its launch, and then accumulate if you're looking to accumulate when we found a support level bottom. If you look at any of Trump's other tokens, you'll know what I mean. Sam, you've been mining since Bitcoin hit 66K last year. Oh, nice. Good job, man. It's a cool way to make money. And if you're really efficient, if you have a lot, you can improve the efficiency code on it so that the miners will last longer and produce more rewards for you too. But yeah, guys, I gotta go. I got a call with the community that starts in like 60 seconds. Appreciate everyone who's jumping on. Just a quick recap. We're waiting for a potential break of this level, and they'll be looking for a retest for a stop loss guard, and they'll be targeting around here. If we instead get like a local SFP right here, that's a good opportunity. I'll be jumping in on that. If we instead come down here, get an opposing change of character here, good opportunity. Like there's so many levels to prepare for potential decent areas. There are better levels than others, of course. Like if we got this sweep, that'd be pretty awesome. Or if we came down lower to 107,850, that'd be a really good opportunity as well. But you take what the market will give you, and you decide whether or not you want to take it, right? But yeah, I'm hopeful for a return down here to front run this break, and it looks like that wish might be granted. It's starting to come down. It's finally starting to come down a bit. You have to go down the 5 minute when you see crunch like that. You see we're double topping internally here within this range. Just got to break this low, full body candle close, and then we can start coming down here. All right, guys, I got to head out. You have yourself a great day. Thanks for showing up. Thanks for sharing, liking, subscribing, all that fun stuff. It helps out a lot, guys.